Hey folks, David Frost, mystrategicforecast.com, May 12th, 2014. Not bad for a Monday. We've been talking about the SPY or S&P 500, and this is a chart. This is a daily chart of the SPY. And you can see here where we made a new high today. We took out this big red bar down move from April 4th. And we chopped around here for a while, but we made a new high. So, odds on favorite are we're going to have to take a run at 1900. The stopping point looks to be first target would be 1905. Then we can go as high as 1920 to 25. And if we go beyond that, we'll talk about it then. But for now, it's not going to be a straight shot up. The market probably will have a little difficulty getting through 1900, but nevertheless, we're going to get there probably tomorrow. And being that this is options expiration week, you can look for some fake out moves. You can look for maybe half a day down on Wednesday, maybe Thursday. The institutions will take the market up, they'll take it down, they'll take stocks up, they'll take them down. We see this month in and month out. So this being the third week of the month, the third Friday of every month is the options expiration. And, this is the real week where they whipsaw the market. So expect the unexpected is the theme here. So we're not ready to short the market, getting a lot of questions about shorts. You have to look for a sign. The market talks to you. The market is a timing mechanism. The market tells you what it's going to do. You don't have to be the top ticker. You don't have to be the bottom ticker. You just have to get the direction right and ride the wave. And that's what we're going to do. We're going to look for a signal, some kind of topping signal, some kind of divergence, and we'll know it when we see it. But for now, the market's probably going to grind a little higher. Don't see any big down move in store, at least not for another 4 to 5, maybe even 6 weeks is when the real pressure could hit. But for now, we're probably going to chop around. Let's take a look at a couple of the other major indexes that we follow because we're not seeing new highs. This is the IWM, which represents the Russell 2000. And, here's your highs up at 120. And, we just made, 2 good days and we're back to 112 here off of a low of about 108.5. So we're nowhere near a new high. Maybe we get up to 114, 115 on this move. That's certainly possible. But I don't see much more than that unless something changes in the market. And the other index that's important, which had a very strong day today, is the Nasdaq. We'll take a look at the Qs here. And same thing. It looks like the small cap index. We're nowhere near the new high. And but we're making high. We're making higher highs. We made some lows, higher lows. I'm sorry, not higher highs, but higher lows. And we're off to the races a little bit. We can test this red bar move from the 4th of April. So this comes in at about 89.30. I wouldn't be surprised to see us test that within the next day or so if we have another strong day up tomorrow. But like I said, it's Options X week, and therefore expect the unexpected. Let's take a look at the gold market now. We'll move over to the precious metals and take a look at the GLD. And what we had here was a little bit of a up move today in the GLD, but nothing to speak of. We're still chopping around here. There's nothing strong here in the gold market. A little bit of a higher low here, but really this is considered bearish consolidation. This chopping around this long looks like it wants to go lower. If you take a look at the weekly chart, you'll see it's more pronounced. This down move. Choppy sideways action here, 1, 2, 3, 4, 5, 6, 7, 8 weeks. We could see a down move here coming up briefly any week now. So I wouldn't be playing this on the long side. I really wouldn't be playing it on the short side either because there's just nothing good here. There's nothing talking to us in this chart. Here's the daily chart again. I don't see a play here on the GLD. In fact, GDX started to heat up several weeks ago, and then it just stalled out. And it's the same. It looks like the same chart. In fact, I think the weekly on the GDX even looks worse than the GLD. You know, look at this. This is going nowhere fast. I mean, if this breaks down here, 23, let's just say if it breaks 23, double bottom down here at 20.30, 20, let's just call it $20 even. I don't want to be in that trade. I just no man's land right now. Now let's take a look at a stock that I gave out in the public forum last week, which was FireEye. And the reason I gave this stock out, let's take a look at the daily chart, is it was after hours, it was earnings right over here on the 6th of May. And it had a huge gap down the next day. I knew the gap down was coming because it was getting crushed after hours. So I put out the alert, and I said on a gap down, the stock could find some exhaustion point and reverse back higher. Well, that didn't happen, and it continued down for another couple of days, which is why it was a dangerous play to begin with. It's a volatile stock. But basically, we had the up move today, and we're back down to about where it gapped down on the 6th. So, another good positive day. I'm in there at, I think, 29.50. And, I think we hit that today. We hit 29.29 today. So if you look, one more up day and we'll be in the clear on that one. But, that one, that went down farther than I thought. I thought it would swing back up. It had a huge volume day, but it just didn't happen. But we're getting the up move, and it's not that bad. And, we have our stops in place. So therefore, we're going to look for some more upside, another couple of days of upside. We'll see what this week brings. There's a lot of shorts in this stock, and the institutions have all the reason to bring this up, even potentially get to the, about halfway down this move, about $34, $35. I wouldn't be surprised at that. So that's what I'm looking for in this stock. Last one on the target here is to look at, we're going to go back to the stock market, but we're going to look at JPM, because I want to make mention, without the financials, the market's not really going to go anywhere. Look where the high was for JPM, up at 61.5. We're down here, it's still 54.5, 54.66. There's nothing good here. I mean, it's going to have a tough time getting through 55.5 at this 200 period moving average with the 50 sloping down here. I'm thinking that this is the 20. The red is 20. I'm sorry, and I'm just thinking that another couple of days, and maybe this JPM hits this 55.5, and it might look like a good shorting opportunity. So we're going to keep our eyes on that. But without the financials, market can't go anywhere, and JPM represents the financials in America. So we watch JPM for the financial indicator. And it's also a market indicator. So I think that's a wrap today, folks. It's nice and sweet. Remember, options expiration week. Look for another update tomorrow, potentially on Tuesday, maybe flat to up. And then Wednesday, we might see some whipsaw action. Weird, wacky Wednesday, they call it in some parlors. So go from there, and happy trading. We'll see you on the charts, folks.